And we are live. What's going on, guys? It's Ricky with TechBud Solutions here with a quick Sunday stock talk. Just wanted to talk about what to kind of look out for this week, and also to come on here and break down any stock that you see value. And so again, if you ever want to tune on into any of these live sessions, just literally subscribe to the channel. We tend to host them every single Sunday, right around 6:30 p.m. to 7 p.m. Mountain Standard Time here in Arizona. So don't want to take too much of your guys' time. Let's just go ahead and jump right into it. I'm going to start sharing my screen so you can see exactly what it is that I'm looking at. As you can see, from the extended hours on Friday to now the overnight hours, NASDAQ market is up 0.27%. So markets are in the green. We saw them quickly retrace just very little, and then they quickly began to recover. So as of right now, markets are in the green. They're up about 0.25%, but they look kind of overbought and they look like they're ready to pull on back. Again, these are overnight hours. No one really cares about it. Super low trading volume. But the big news why I thought markets would open a little bit more in the green was based off of this news, right? We talked about it in today's earlier video, saying that the US is rolling back tariffs on products that they cannot be grown, mined, or naturally produced in the United States. So I thought that the market would take, a rollback on tariffs means less tariffs. So I thought the market would be ecstatic, right? Like the market would react in a, just very excited way and just push to new all-time highs. Markets have been doing that. Although I don't support it, nor do I agree with it, it just really would not have surprised me, right? But no, that's not how the markets are trading at all. Markets are in the green, but slightly in the green. And it was a very slow reaction, to say the least. So that's what I'm kind of, what are my thoughts about the market going on this week? I don't know if markets are going to begin to actually recover. We still are testing this like major resistance range. Do you see it right around 607 for QQQ? QQQ is the NASDAQ ETF. There has been lack of progress above, and it also hasn't really found a break of support from like 591 to 590. So in my opinion, markets are right now kind of just consolidating in this range. We have this slight resistance range, which tends to be where it tends to get rejected. Patterns tend to repeat themselves. They don't always have to. And a slight support range, right? So if we see this kind of like support range right around 591 to 590. So I want to pay attention that if markets continue to trade in this range, then it looks like markets are somewhat overbought, and we'll see if they begin to retrace themselves as markets open on Monday. That's going to be my biggest focus. Are we going to continue to trade within this range, or is something going to get factored in that will drive markets to either new highs, cause for a retest, or will we break the support and continue to sell off? So I do not know. Obviously, we're all still waiting for an update on the government shutdown. We're all still waiting on the unknown of where are we with the Federal Reserve, where are we with economic data. If you guys did not see the schedule, everything is like scheduled for this week. We have CPI report, which is the inflation report, scheduled for this Friday, but the government is still shut down. So if the government is still shut down, this will not get reported. This will not get released. So kind of, again, just waiting for updates on Trump. If he sends out a tweet, we all know that that's very influential to the overall market. So I'm not here to make an impulsive decision. Obviously, if you have your long-term investments, regardless of, intraday market volatility, that shouldn't really, encourage you to make, impulsive trades. My big thing is, do I want to go short or do I want to go long? And based off of previous patterns, it would make sense to go short, but obviously markets are more bullish than bearish, so you have to give more credit and more respect to the bulls. So definitely do not want to blindly enter a short just thinking that markets have to retrace just because they have in the past before, right? So staying patient, staying calculated. That was a really big thing that worked well for me last week, is trading based off of criteria actually being met, not trading just because you can. And I know I'm not just speaking for myself. Hopefully, maybe for, not hopefully, but I'm sure for a lot of you guys, we can all do a much better job waiting for our criteria to actually be met rather than just forcing a trade and hoping that it plays out according to plan. I do have a bone to pick with some of you guys. In today's video, when I talked about, if you guys wanted me to go live, I asked for 500. It was a very simple video. I literally just talked about the Colombia update of pretty much President Trump saying that, hey, we're no longer going to be sending on over money to Colombia, and insulted the Colombian president, right? I talked about the rollbacks. I talked about Tesla's earnings, Intel, was at IBM, right? And then just a few updates talking about the top performers. It was a random, just a quick little update video. Video's doing super good. I asked for 500 likes. You guys gave me 1,300 likes, I think. And all I have to say is, what the heck? There's times that I dedicate a lot of time and effort into like making sure that, there's a specific intention to the video and then it doesn't even do well. And then this one was just like, hey, I'm just keeping you guys up to date. And you guys, oh yes, Ricky, we love it. Yeah, let's do Sunday Stock Talk. And so, hey, I mean, I'll take the love, of course, but just wanted to ask you guys again, if there's anything that I could do for you guys, especially during this live stream, if there's any stock that you guys would like me to break down, just feel free to share it in that live chat and I'd be more than happy to break it down for you guys. Okay. So let's go ahead and jump right into it. If you have a stock that you would like me to break down, I'm all yours. For the next 10 to 15 minutes, I will simply be breaking down stocks that you guys want me to. So again, all I ask you to do is smash that like button. And if you're not subscribed already, make sure you subscribe. So we got Trey Ford Hampton. All right. BMNR. Oh, I know that one. That's that pump and dump stock, right? Oh, yeah. Is this the one that I think it is? Yeah. It pumps, it dumps, it pumps, it dumps, it pumps, it dumps, and right now it's currently dumping. I don't trade stocks like this. I believe that there was someone like in our LPP group that was like really big into trading the volatility behind a stock like this, buying into the lows, selling into the highs, buying into the lows, selling into the highs, buying into the lows, selling into the highs. And now it's kind of, pulling on back. So I could see why, just for me, it has too low a volume. It's a little bit too volatile, although it doesn't look like it. These moves are quite significant. So if we look at where we are currently at to what it could rise to, that's a 30% rise. But then also from the highs to the overall lows, you have to take both sides into consideration. That's a 26% sell-off based off of the most recent sell-off from $65 down to lows of 48. That's a 26% sell-off as well. So again, if this is something that meets your criteria, I can see why some people might trade it. Do I recommend it for beginners? Of course not, right? Super high risk. It looks like it just pumps out of nowhere, which means that it could dump out of nowhere. It looks like volume is beginning to fade. The rallies are not as strong as they once were, which is a huge red flag to me. But again, in a market full of greed where irrational valuations are supported, there's a lot of crazy things that are happening. But again, if it all comes down to like you wanting to leave it down to luck, this just wouldn't be a stock that I would care to trade or encourage a beginner to really focus on. But if you're someone with experience, you know how to manage and mitigate risk, I can see why you're paying attention to this to possibly go long on it, right? Based off previous patterns, it forms these very pretty, oversold reversals, oversold reversals, oversold reversals. That's kind of what I would look out for. Maybe set an alert for the break above 53. It's just my 2 cents. So again, just because it doesn't meet my criteria doesn't mean that it can't meet yours. We're all wired in different ways. And if this is something that you want to partake in, be my guest. It's your money. I just hope that you hold yourself accountable and you manage and mitigate risk. Okay. Check out UNH, please. What's going on, Adrian? Hope that you're doing well, brother. UNH. Can I get your thoughts on Shop, please? What's going on, Sebastian? Yeah. Let me break this down. So UNH still holding on very well. A lot of you guys know that I'm invested in it ever since it sold off. It really started to take off after Warren Buffett announced that he was invested in this, but he was invested in UNH while it was selling off. So that's just the really funny thing about the market, is as soon as someone credible invests into it, then obviously there's much more conviction that's driven into the stock. I still am saying the same thing that I said before I knew Warren Buffett was invested, and it's that UNH is fundamentally a well-run business. It's currently being investigated. So in the short term, expect a lot of volatility, expect more potential downturn. But again, I bought it with the intention of not to sell anytime soon because I didn't expect it to recover as quick as it already has, as we bought it below $300 per share. But we'll see, right? I still think there's a long road for recovery. As we get more updates about its investigation, that will determine if this stock continues to uptrend or if it begins to downtick. This is not a stock that I would care to trade. This is more of a stock that, I don't mind buying at a, what I view to be inexpensive price. I've talked about the fundamentals behind this one. This is a company that trades at a market cap. Let me just double check. Yeah, 322 billion. I can pull it up for you guys right here. So if we pull up UNH, this is how I made sense of it. There's two things. It's a company that produces revenue of 422 billion. Name one other tech company. Name one other tech. UNH is not a tech company, right? But name one tech company that is currently one of the top performing stocks. Any of these? None of them. None of them get close to this kind of revenue. None of them get close to this type of net profit, net income. Not one. This company UNH, like I said, you might not want to invest in it morally speaking because you don't trust the company or you don't respect the company. And I think that's fair, right? This is a free market. You get to decide what you choose to trade and what you choose to invest in. You should never be convinced to invest in anything like that, right? But it's very easy to see that, wow, this is a company with $422 billion in annual revenue, yet because of this recent sell-off, its market cap is $322 billion. It was nearly 3 times that, now twice as much of that last year. So that's one thing. The other thing that I talked about was when it was trading at $250 per share, even at $300 per share, I was like, it offers a 1-to-1 ratio. Meaning that if it goes to 0, I can lose $300 per share. If it goes back up to $600, I can double my money, right? It offers a 100% return, and at worst case scenario, it offers that 100% loss. I thought that was rather unique. When I shared that, a lot of people, agreed with it. But again, it's not something that I ever expected to begin to recover so quickly. Then a few weeks later, Warren Buffett announced to be one of the investors, and then that caused the stock to shoot up like 15 to 20% from when we started talking about it. From the overall lows that it made of 233 to its current highs, it's up about 50%. But remember, it is down nearly 50% from its highs of 600 to its lows of, hit lows of 233. That's nearly, what is that, like 60%? Almost. Yeah, like 58, 60%. Yeah. So definitely, I think UNH for me is a stock that I would like to continue to invest in long term based off of fundamentally how well ran it is. But I don't expect it. If you're trying to make money right now, this would not be the stock that I would care to trade or invest in. It's not a hyped up stock. Like it's not your PLTR. It's not your Okolo. It's none of that. It's a well-established business that makes a lot of money. And that's great for fundamental investors. Okay. All right. Let's do 3 more stocks. If you want me to break down your stock, you need to share it in that live chat. So again, just drop a thumbs up, share your top stock in that live chat, and let's break it down for you. I would love to break down maybe a stock that is about to report earnings. There we go. Ruby. Appreciate you tuning on in. Thank you for your time on this Sunday. Yep. Tesla has earnings What do you guys think I'm going to say about Tesla? Let's just see. Let's see. Real quick. I want to see how well you guys know me. What do you think I'm going to say about Tesla? Tesla reports earnings this Wednesday. What do you think my opinion about it is? Overvalued, short Tesla, short, sell. Gonna get wrecked. Okay, so I think for those that know me, know that I wouldn't care to invest in Tesla at $450 per share. I am invested in Tesla at $200 per share, and I have no intention of selling anytime soon. I don't own that much of it in comparison to my other positions, and that's for my long-term portfolio, right? That's just something that, to me, Tesla is a long-term play, but to me, Tesla is also a very irrational. It currently has a very irrational valuation. I think that there's obvious red flags going on with Tesla right now, which is why the Tesla investors that have a high average purchase price at like 450, 400, even 350 per share get really triggered when I bring this up. So do I think that you should sell your Tesla? No, I think that if your intention is to invest in Tesla long term, you should keep and stick with your plan. Would I invest in Tesla? Invest means the intention of buying now and holding for a long period of time. Would I consider Tesla a good investment right now? Of course not. Do I think that Tesla can make a good trade as it reports earnings? Yeah. This is the last earnings that Tesla is about to report with its EV subsidies, with its EV credits. So this might be the last profitable quarter for Tesla before it really has to turn things around. For those that do not know, Tesla EV credits expired September 30th, 2025. So that was at the end of Q3 for 2025, which is the earnings that they're about to report. They were pushing and marketing that very hard. So it wouldn't really surprise me if this time as they report earnings, they maybe meet or slightly exceed expectation. I want to be optimistic for Tesla. But what about their guidance for up and coming quarters? That is the big red flag. That is the elephant in the room. Demand is beginning to fade for Tesla. And now, with no longer having EV credits or EV subsidies to help incentivize Tesla and Tesla buyers, I wouldn't be very surprised in the quarters that follow, if demand continues to fall, that Tesla can actually begin to report negative or losses in up and coming quarters. Tesla truly has to turn things around. And if you're a level-headed Tesla investor, you know this. I don't want to hear about the Optimus or full autonomy story. We all know that Waymo's doing it already. No one cares. I don't want to hear about the Optimus robot. Okay, like once they start offering it and selling it, then we can start talking about it. Until now, it's kind of just like a really good story like the Tesla Roadster. 7 years later, after my pre-order and a few $1,000s gone, I still don't have it. So unless Tesla begins to sell that story once again of pre-order your Optimus robot and tries to build up the hype, that's all I really see in Tesla's playbook right now, because demand is beginning to fade. And Tesla has positioned itself where it's not just the car company, but right now its only business is, its core business is selling cars. And guess what? Business isn't growing. If you actually pull up Tesla and its recent quarters, again, it's not just an opinion, it's a fact. You can click on the Pro Research and quickly see that Tesla's revenue, which are these big green bars, again, this is quarter after quarter. This is from 2023. You can see that revenue was growing up until, the start of 2024. And then we began to plateau. And now recently, we've actually began to see a decline. That is the concern. Tesla is trading at a huge multiple. We all know that. Tesla trades at a crazy PE ratio of 248 times its earnings. But Tesla was able to justify that when it was it had a growth story, kind of like PLTR. It has a growth story. Tesla no longer has a growth story. It's not growing anymore. So it can't sustain that irrational valuation for much longer if its fundamentals are that far off. That is my concern. That is my concern with something like Tesla. Do I think that that matters in the short term? No. I think that if Elon does a really good job sharing what his projections are for 2026, and if he sells the story, I think Tesla, as many of us have seen, can push up. I think if Elon does a really good job selling the guidance, that would be the best case scenario for Tesla. Because guidance, to me at least for now, doesn't look very good. But again, if anyone can do it, Elon definitely can, right? So that's the exciting part that I'm looking forward to. So very simple. Would I invest in Tesla right now at 440? Of course not. Would I consider day trading Tesla based off of the possibility of this thing reacting in a positive way? I can consider it. Again, it's a high risk, high reward type of play. If that's your style, then great. If you're trying to be more conservative, then I don't really think that it would align with your criteria. That's just my 2 cents. So if someone had $100,000 and they wanted to just invest because they don't have the time to trade, what stock would you suggest to invest it in? If you have $100,000 and you don't want to do it yourself, you can just get a financial advisor or just throw it into a growth index or growth ETF. QQQ, SPY are very popular ones, but I don't really think that right now would be the best time to do it because markets are at all-time highs. Again, that's a conversation you should be having with your financial advisor, or any bank institution would be begging for, let me get 1% of that $100,000 for a management fee, and they can help you diversify. That's if you truly wanted to be hands-off in that sense. If you truly don't want to touch it, don't even want to learn more, you need a financial advisor. If you're someone that's open to learning more, which I would assume if you're on my YouTube live stream, if you're willing to learn more, I would still get a financial advisor because what you want to do is invest, but at least inform yourself and educate yourself so you can have a back and forth conversation to not make the investment decision, but at least to entertain it and make sure that it aligns with your criteria. That's my 2 cents. So Amazon Ricky, okay. I don't like how you're spamming David. No more spamming. Please. No spamming. The more you spam, the less likely I will be to break it down. SoFi, I'd be more than happy to break that one down. SoFi, I'm going to do 2 more. So SoFi is one of them. What do I think about SoFi? If I remember correctly, very quickly, let me pull it up. I just want to understand. For those that want this software, this is Investing Pro. You don't have to download it, but I do have a discount link if you want it. And again, with all respect, you don't have to. But it's just so you can perform a little bit more of a fundamental analysis. It's the first link in the description down below. It gives you 15% off if you want Investing Pro. It just allows me to understand a little bit deeper what these companies are trading at by being able to perform a quicker fundamental analysis. So SoFi is trading at a 56.6 times their earnings. Revenue is $3 billion. Net income has come out of the red and into the green, but that's during, again, the best time to do it. Pro Research. Look at this. Irrational valuations, but look, this has a good growth story. Look, quarter after quarter after quarter. So I can see why SoFi is trading at a higher price with pretty crazy valuations because, again, right now there is no question. Everything is overvalued. At least that's my opinion. You don't have to agree with me. I get that, right? But I can see why they would choose this one because, again, it's not that its valuation is supported. It's that its valuation can carry some, has some ground when its growth is so consistent and it's so impressive. It's not just talking the talk, it's walking the walk as well. It's not like Oklo, a bullshit company, that has no revenue, that's not expected to have revenue for the next, 3 years, that is pumping up. Like SoFi makes a little bit more sense to me. Do I think it's a cheap stock? Of course not, right? It's still trading at a crazy price, but right now irrational markets support irrational valuation. So as long as that sentiment continues, it's still high risk. I wouldn't be over leveraged up here. And if I think I saw your message correctly, you said that you were bag holding. I don't know what that means. If you're bag holding on a short, if you're bag holding on the long, you shouldn't be bag holding anything and then asking for advice. Again, kind of like reverse engineer that. If you are making a mistake and you made a bad trade, think back on every trade moving forward. It's like, okay, well, the first mistake that you made was you didn't have a plan going into it. And if you did have a plan, you obviously didn't follow through with it. Every time, just like we've shared with our LPP members, every time that you enter a trade, you should never lose more than what you expected to make. As soon as that trigger happens, as soon as you meet that threshold of, I have now lost more money than I would have made on this trade, I would cut losses right then and there. It just doesn't make sense fundamentally. Criteria is not making sense. Every single time that you trade as a beginner, you should be encouraged to only take advantage of opportunities that yield a greater return than the risk that you are willing to take. And if that is not clear enough for you, then I think that you maybe need to dedicate a little bit more time to building your criteria checklist. With that being said, it's kind of trading within a range. It's highs of $29, it's lows of $25. And based off of, I would say, how the market is trading, if markets gap up and begin to recover, it will most likely give SoFi the environment to begin to recover back up to $29. If you get the chance to get out in the green because of that recovery, because again, markets are still more bullish than bearish, please don't view it as a good trade. Even if you end up in the green, view it as a bad trade with unhealthy habits. No risk management. You know what that means? You can win. You could have won all of 2025. And this won't sink for a lot of you. And I know that it won't, but maybe for one of you out there, it will. You could be up 1,000% in 2025. If you have no risk management and all you've been doing is going long on stocks that have been skyrocketing, if you have no risk management, no actual criteria as a trader, no structure, all it's going to take is one bad trade to wipe everything. Because why? Because with no risk management, you are one bad trade away of being over leveraged at overbought levels that when things begin to sell off, you don't know what to do. And when you don't know how to manage risk or cut losses, and when you're over leveraged, now you're borrowing the most amount of money because you now have the most, that now you're going to lose the most in the shortest period of time. It's unfortunately what happens every single time. Leverage is a vehicle to be used when direction is favorable, not a tool to use when things are going against you. Please understand the difference. You will see that I will say this so many times, over and over and over again, more now than ever before. And if it bothers you, I'm sorry, but I need it to be engraved in your head. Leverage is so incredibly risky at overbought levels. Buy your Bitcoin. Shoot, even buy your MSTR. I know they're high risk plays. I don't support them, but if you're buying them with cash, that's fine. Don't borrow it. Don't buy it with borrowed funds. I cannot stress that enough. Okay? And I hope, again, I'm truly just reminding you, do it because it makes sense to you. And although it might not make sense to me, whatever stock you're invested in, whatever stock you're trading, just be calculated, focus on your ratios, and don't be leveraged. Please. Like, I think that is something that we can all agree with, right? Even if you don't like me, I think you would say that those are pretty healthy habits that every beginner should focus on, right? That's all I've been trying to work on with my LPP team, is closing out our day trades every day at the end of the day, recapping our trades, highlighting areas of opportunity, and highlighting the risk of leverage. I think that's one of the best things that I can do with someone with a little bit of a social media following, is that as markets hit all-time highs and irrational valuations are beginning, those red flags are beginning to be waved, even if I'm bugging you, even if I'm annoying, even if I just save a few of you, right? Not by not being invested, but but just by not being leveraged, I think that can be a huge lesson. And by saving a few of those people, if markets do end up retracing, again, it's just you're going to be grateful because you're not on borrowed funds. Okay? All right. Ricky, how many people are in your LPP team? A few thousand. So yeah, if you guys, again, want to check it out, I trade live every morning. You don't have to, but if you want to check it out, I do trade live every morning right at market open for about 30 minutes to an hour with them. It's a one-time payment for lifetime access. It's $300 off. I just put a discount link in there for you. It's the second link in the description down below whenever you're ready. So if you sign up tonight, you can watch me trade live as soon as tomorrow. Okay, just make sure that if you sign up, you watch the welcome section of the video lesson library to get access to the Discord and the daily live trading session. Okay, so all right, so STRL. If it's a super low volume, I would not trade this myself. It's too low volume. It's nothing that I would care to trade, but I could see why you're paying attention to it. It looks bullish, consistent. There is no break of pattern. Looks incredibly hyped up, right? Based off of its recent push, but I can see why you're paying attention to it. It just wouldn't be something that I would care to invest in or trade myself. The volume, and also it's no longer a good deal. Not that I would short it, right? Just because something is overbought doesn't mean that I would short it. It just means that I'm okay with accepting that I missed the trend on this and just move on from there. And also the volume is too low for me, but I appreciate you taking time and sharing this one with me. I think one that I was requested of me that I did not break down was Shop. Shop also very similar setup, consistent higher highs, higher lows, 4-hour time frame. Everything looks bullish on this one. Also not a stock that I would care to short, but also not a stock that I would care to invest in at overbought levels. So let me pull it up. Shopify trades at an 87p ratio. It looks like things have been choppy for it. Yeah, I just feel like this is a ticking time bomb. Shop has its good moments. It has an amazing growth story as of right now. Revenue has been increasing. So maybe I do have to look into this one a little bit more. But with that higher PE ratio, again, just irrational markets support irrational valuations. And I think right now it's performing at its peak. If things begin to retrace, it's just not going to be as pretty. But obviously its revenue does look very, very impressive. So I'll make sure that I continue to keep an eye out for it. And maybe it's something that I can consider on a retracement if it ever presents itself. Okay, because I do like that revenue. So it usually thrives during this season. That makes sense. We're coming up during one of the busiest, shopping times of the year. That makes complete sense. But I think it's just more of market condition and market sentiment. So I'll definitely look more into it. I'm actually quite impressed with its consistent revenue growth because it's not a newer company. So there has to be changes that were recently done. So thank you for sharing that. And it's going to encourage me to look more into it. Okay. Maybe I'll make a video about it throughout the week if I find something impressive. Okay. That's kind of it. I broke down 5 stocks at least. I think I broke down maybe more. But remember, we got IBM. What is it? IBM, Tesla, and Intel reporting earnings this week. We also have Coca-Cola and Netflix reporting earnings this week. We have tariff updates coming along, right? With China, we're pulling out of the 100% China tariff. So a handful of different things that are either getting announced, are still paused, the government shut down, economic reports. So I'll do my part in keeping you guys up to date. As of right now, unless you feel super certain because you know something that most people don't, be my guest if you want to be aggressive. I do not believe that now is a suitable time to be aggressive. I don't think you need to be scared. I just think that now is not a time to be leveraged. So if you see an opportunity that meets your criteria, don't be afraid to take it. Just make sure it's calculated, make sure it's intentional, and make sure that you have your risk management in place. So I'm excited to, share the good and the bad during our live sessions. Whenever you feel like you're ready, we'd be more than happy to have you there. It's very similar to these Sunday stock talks where you get to see me and see my screen. The only difference is that it's right at market open. So tomorrow, right at market open, I host a private live session with my LPP team, and they get to watch me trade live every morning for about an hour every day. So if you want to tune on in, second link in the description down below will give you access to it. And like I said, it's a one-time payment for lifetime access. We have members that signed up back in 2018 that still have access to it today in 2025, and they literally only paid once. So I appreciate you guys' time. I hope that I earned your thumbs up. Maybe you can consider subscribing if you feel like I earned it. And like always, let's make sure that we end the year on a